speed round. For those who are not familiar with our speed round, we will flash the stocks one by one, and we'll ask Juanis and April whether they like or dislike the stock by raising their paddles, like or dislike. Please take note that these are their personal views, and they are more short-term in nature, and it's looking at the immediate drivers of each stock, whether up or down. We will flash the stock on the screen, and April and Juanis will raise their paddles simultaneously and explain why. Juanis will, of course, talk about technicals, and April, on the other hand, will focus on the most recent drivers or the issues of the particular stock. I just like to let you know that during the last speed round, we had, I think in March and also in June this year, when they agreed, please note that when they agreed, I think it's about 9 stocks that they agreed on, meaning that they had both like it or they both dislike it. I looked at the prices and how they have performed, where they agreed. The stocks basically outperformed the market and even moved higher to their or according to their views, majority of the time. They might not be right all the time, but so far they have had good batting average. So for those, take note and look at their views. Okay, so let's proceed. Let's proceed to the speed round. Let's look at the first stock. What do we have? ACEN. Okay, stock. This stock has corrected recently, but still, we quite strong at 8 pesos, no? 8 pesos level. Still 20% above the recent follow-on offering price of 650. Despite analysts seeing this as expensive in valuation, looks like this stock has been generally resilient, producing clean energy and will become the largest in Southeast Asia by 2025. So the question is, does this stock deserve a second look? April and Juanis, do you like it or dislike it? April doesn't like it, but Juanis likes it. Okay, Juanis, go. Do you like it?
Well, as you pointed out, it's managed to be able to hold its resiliency. If you, like I pointed out earlier, and many of stocks have actually fallen down to lows they've had this year. This guy has managed to correct, but it's managed to mitigate that. So I think it might be able to correct a little bit more, but again, to me, that is still an opportunity to be able to pick this up at good supportive levels. If possible, between 770, maybe even if we can go all the way up to 710 or 720, that might even be much better area.
Okay, trading opportunity there. April, you don't like it?
Yeah. Well, let me talk about the reasons why it went up. It really does have a good story because it was able to significantly grow its power generation capacity. I mean, it started out by buying one of FINMA's power plants, no? And then, of course, now it's on track to grow the capacity to 3,000 megawatts and potentially 5,000 by 2025. Aside from that, of course, its plan is to be a pure renewable energy company, and that has been a popular theme among investors. And I think lately also, there is an expectation that it will be added to the PSEI index this August. Okay, so I think people are buying it ahead of that, and we know that when a stock gets included in an index, it usually goes up. But what are the risks? First of all, again, the valuation, it is expensive because it was able to grow the capacity by issuing so many shares, such that even though the total earnings will grow a lot to 3,000 megawatts, the EPS growth is actually less than 3%. The compounded annual growth rate is less than 3%. And even though it has corrected, it's still trading at 27 times PE, which is really very expensive for a power company. And finally, my concern is after it is included in the PSEI index this August, it may correct, or there may no longer be a reason because kumbaga priced in eh. So actually, I asked the guys at KLOM, sabi ko, hey, so how are renewable energy companies doing? They said, well, medyo they're consolidating na eh. Because they already went up a lot last year. So they're not going up even more. So parang priced in na. So that's just my concern na parang it might already be finished soon.
Okay, thank you, thank you. So let me try to analyze this. Juanis likes it, April does not like it, which basically means, if I were to interpret it, that there may be a possible entry point or a trading opportunity, but you may need to manage your exposure very carefully because there are issues that that April just raised. No, so maybe for those things that they don't agree on, when I looked at the past in their speed round, the stocks really they don't have consistency. There's no discernible pattern. So that's the way I'd like to look at. I'd like you to look at this when they like or dislike, when they disagree. Well, that's for the ACEN. Okay, let's have the next stock. The next stock that was requested, Ayala Land. Ayala Land. Oh, I think it was down 7% today. Huh? It's so. I don't know why, but maybe because we have another lockdown, no? So in the coming weeks, affecting the malls. So is this correction already presenting an opportunity, Juanis? Like or dislike? Oh, they both like it. They both like it. Okay, Juanis, go.
Well, I'm looking at this in a little bit more wider period in time because I think this is a bottoming out process for Ayala Land. And after making its first rally, which managed to climb above all the other moving average, it made a consolidation. And of course, we know why it's probably sinking now is because of the rumors of the rumors initially on the ECQ and the reality of it now. And that's why we saw a generous amount of a decline today. But I think that a pullback coming closer to that low that you see there would be the next opportunity you want to be able to buy a land in the prospects of that reopening swing there. So I do like it in that respect.
Thanks, Juanis. April?
Okay. Well, first things first, I'd like to talk about the property sector. I think Juan has highlighted the fact that the property sector has been one of the weaker performing sectors in the market. So I think in general, Ayala Land was negatively affected by that. And also because, of course, earlier on when I did the presentation, I also talked about how property companies were the worst performers in terms of the first quarter earnings, and not surprisingly because of the malls. It is very vulnerable to ECQs, which right now we're still seeing it happen. No, but the reason why I still like it is because I think the valuations are still attractive. Um, it is not the cheapest property company, but if I compare its valuation today relative to its historical average, it is still trading at a huge discount. And of course, another reason is despite the crisis, we're not seeing property prices go down, but the share price of Ayala Land has gone down quite a bit. And in terms of business segments, I think the malls are hit badly and the hotels, but its other businesses such as office leasing is still resilient. And in fact, it's already recovering because the BPOs are, coming back in. POGOs are virtually flattish already. And then the residential sales are starting to pick up. So given the price, I think it's attractive.
Okay, good. Fundamentally and technically attractive. This is one for you guys. Those who have I think in the survey that we had is there are still 21% light invested and 11% not really invested. So this is the opportunity for you. Ayala Land. Next stock, Metro Bank. Probably the more conservative bank than the other two banks. They issued the special cash dividend, right? And they have been preserving their lending. Is the price now corrected already? Is that complete or just that broke that support level? What do you think, guys? Juanis, do you like it or you don't like it? Oh, April likes it. Oh, Juanis doesn't like it. Okay, Juanis.
I'm making my decision based on different banks to buy. And if I were to look at the technical conditions of the banks, I think I pointed it out earlier. Metrobank and Security Bank are the weakest in terms of the big banks. And so I would rather look at maybe the BDO or the BPIs for the meantime, because I'm not exactly sure what's causing the underlying weakness in Metrobank and Security Bank. And why are they reacting so much? Especially breaking the previous low. I mean, technicians don't like to see that because it generates a more declining type of a trend. Clearly, of course, as they drop, they become more attractive in valuation. But I don't know why it's showing such weakness. I would think that you could try to hold on to the previous low. I hope this is just a blip and I see prices recover above that line again tomorrow in 1 or 2 days. That would be helpful. But for now, I will stay defensive.
So this is about too weak for you, Juanis. Too weak for you.
Yes.
Yeah. Okay. Sige. Next stock, please. What's our next stock?
You didn't ask April.
Oh, sorry. I'm sorry, April. Sorry about that. April,
Yeah.
go ahead. What are the key drivers and
Well,
risks?
yeah, I think in general, why investors don't like the banks in light of COVID is because, of course, they're worried about loan demand and, of course, higher NPLs if the economic recovery doesn't pick up. No? But the reason why we like it in the research team is because, of course, Metrobank is one of the big three banks that are expected to perform better relative to the smaller banks because of certain benefits of being a big bank, such as the branch network, the large commercial lending portfolio, um, and Metrobank has one of the strongest balance sheets because it has a very high NPL cover, so more than 100% covered for the NPLs, 166%, and CET ratio, which is a capital adequacy ratio, is at 19%, and the minimum requirement is 8%, so more than double. So because of that, Metrobank this year paid out a special cash dividend of 3 peso per share, bringing the full year cash dividend to 4 pesos. So that's a 9% yield. And we think that, yeah, that is another possibility for 2022. Okay? Kasi 19% pa yung car. Tapos the lending naman is a little bit weak at this point.
Yeah.
And then the valuation, I don't think it's fair that the stock should be traded below the book value because it has a very strong balance sheet. It will survive the crisis and it will not suffer from huge NPL write-offs that it cannot support given its huge non-performing loan cover.
So it's something that we can watch out for. No, the fundamentals are good dividends, but the chart is a bit weak. So we might just have to wait for entry points like Juanis, right? Good.
Wait or look for another option.
Look for another option. Okay, thank you, guys. Next, please. Jollibee. Oh wait, whoa, well, look at that correction also. No, is this already an entry point? Is there an opportunity in anticipation of their opening? Do you like it or you don't like it? Oh, they both like it. Juanis, why do you like it?
First, I would say yes, this is a candidate for that reopening. Is it an entry point right now? Maybe not. It could just attempt to be able to correct a little while longer because the technicals still look weak as of right now. It has not gone back to an oversold state. So there could be a little bit more of downside. So my advice over here is if you agree with me and I think this is a reopening play, you want to be able to just wait a little bit more of more downside action here and pick it up. It should not go back to where it came from in terms of that May low. So a higher low here is your opportunity to buy back into Jollibee.
Okay, thanks. April?
Yeah, well, I actually looked at the performance of Jollibee relative to the index, and I noticed that it's one of those outperforming stocks. And I just want to highlight the reasons why, because first of all, it has a higher exposure to the international business. Um, and of course, we know what's happening in other countries, like in China, conditions are almost back to normal. well, actually, I think it is back to normal. US is also back to normal. And of course, in the US, it has Smash Burger, no? And well, the two drags in its performance, which are the money-losing acquisitions, Smash Burger and CBTL are already showing signs of a turnaround. So I think that is very exciting because well, the company at this point is still valued below its historical peak price. And aside from that, the domestic operations are benefiting from the restructuring program.
Mhm.
So even with the sales still depressed, they're already turning around, and there is some insider buying going on. So what are the risks? Well, of course, the domestic operations
Yeah.
are vulnerable to another ECQ and lockdowns. I mean, Jollibee kind of explained, you know, because they are targeting more of the C to D market. When the government locks down, the C to D market don't actually um, order online or call for delivery. They actually prefer to walk into the restaurant. So they really are hurt by it.
Okay, thank you. I'd just like to manage your time now, guys. So let's we're already extending, but let's try to do it a little bit faster, please. So next, please, avoid this power. Um, Brownouts can benefit this company, right? Do you both like it or you don't like it? April likes it. Oh, they both like it. Juanis, go ahead.
Um, I like it insofar that at least I've seen a trend, a potential trend reversal. I just want to be able to have another secondary low to be able to base on. So although I like it, I will approach this gradually. I don't want to go in here too aggressively as of yet, but I think this will potentially reverse.
Good, good. April?
Okay. So the reason for the weak performance first is it's poor earnings last year and the removal from the MSCI index this May. But why do I like it? Well, this year we're already seeing a significant improvement in profits in the first half. Earnings are up by 188%, I believe. And there are expectations of a power shortage soon, and Aboitiz Power will definitely be one of the beneficiaries, and the valuations are very cheap with the stock providing an attractive dividend yield of around 4% for next year, 4.2. And there is some insider buying going on.
So good fundamentals and chart also looking good for Aboitiz Power. Next, Metro Pacific. Metro Pacific has more of a value play, but the stock continues to go down. Juanis, April, do you like it or you don't like it? Juanis doesn't like it. April likes it. Juanis, why? Why don't you like it, Juanis?
Well, you said it, it continues to go down. So I'll just bank on what you said, Marvin. I would probably sell this on a rally until I can see a major turnaround.
April?
Yeah, well, I think the reason why people don't like it is because of the concerns of regulatory risk, because
Mm,
almost all its businesses are heavily regulated.
yeah.
But that said, remember that it's Maynila that actually got a new concession from the government. So that
Mm,
kind of means that, there is less regulatory risk. And in terms of valuation, let's talk about how attractive the valuation is. So one of its subsidiaries is Meralco, which 46% stake in Meralco, but the value of the whole company is Meralco already. Like everything else is free, and that is based on the market price of Meralco, which is also depressed, by the way.
mhm,
And
mhm,
yesterday,
mhm,
the company announced that they will resume their share buyback because they kind
mm,
of realize that the stock is really cheap.
Okay, okay, cheap, but chart is not looking good. But okay, we'll see. Next, please. Monde. Quite a successful IPO, I must say, no? Is this correction enough? April, Juanis, do you like it or you don't like it? Oh, they both like it. Juanis, good correction, huh?
This could be the B wave of a correction, so there could be a little bit more of an extension. But normally, after an IPO run, it goes through a consolidation phase, which it's doing now. Even if it pulls back a little bit more, I think you should be buying this already gradually for the potential up move we're going to see later. So go ahead and begin.
Okay. April?
Yeah. I like this stock because of first of all, in light of the lockdown, it's pandemic proof because people will still eat the instant noodles. Uh,
Lucky
and then
me.
of course, yes, they will still eat Lucky Me. And then secondly, what I find really exciting about it is the meat alternative business,
Oh, yeah,
which
yeah,
is
yeah.
corn in UK, number one. And that said, the market cap of Monde, the noodles and corn is 260 billion pesos.
Mm.
It's comparable in the US. Beyond Meat, which is a pure meat alternative business, is valued at 400 billion pesos.
Mhm,
Whereas
mhm.
Oatly, which is another alternatives milk business, is priced at 500 billion pesos.
Wow.
So it's that cheap. And aside from that, of course, I mean, if we were excited about ACEN because it was an index play, Monde is also an index play. I
Mhm,
think
mhm.
by February, it could be added to the
Oh, Feb na?
PSEI. Yes, because you need 9 months, 9 months of a trading
Okay.
track record to be
Okay.
included into the index. So
Mhm,
I think by February, pwede na siya, no?
mhm.
So of course, in light of that, I think the fund managers will also be buying this. So ano lang, right now, I just want to share with you there are rumors that its first half earnings is weak, but I don't know if
Oh,
it's true.
oh.
So that's something that we should watch out for. But I believe it might be a good buying opportunity.
But when it comes out, you just tell us about it and
Yes,
come up with the research.
abangan, abangan.
Abangan. But it's
Yes,
an
oo.
opportunity, so far. Thank you.
Yeah,
Thank
oo.
you. So we have four stocks already there. Next, BDO. Oh, largest bank. But NPL, is it already stabilizing? Do you like it or you don't like it? April likes it. Juanis likes it. Another one. Juanis, how does the chart look like?
Well, it looked much better yesterday, but so far it's standing over its previous low. And as while it's still doing that, I think there still is good potential for it to be able to make a recovery. And normally when I see rebounds, this is one of the first banks to also make a rebound. So I'd stay quite perspective for BDO.
Good, good. Thanks. April?
Yeah, so same naman. The key investment highlights are the same as Metro Bank. Actually, in terms of the strong balance sheet, it is also strong, but not as strong as Metro Bank. But that said, I think its benefit is that it is the biggest bank.
Mm-hmm.
And
Mm-hmm.
fund managers like buying more liquid stocks, di
Yeah.
ba? At saka in terms of valuation, well, it's not below book value, that said, but it is also a reasonably priced stock, very cheap relative to its historical average. So I think that's why fund managers still like it. No? And yun na nga, not bad naman, strong balance sheet also with sufficient NPL cover and ayun nga, CET1 or the capital adequacy ratio is above the 8% minimum requirement, but not as high as Metro Bank,
Mm-hmm. That's still good,
but
BDO. So
still
good
very good. Yeah.
fundamentals, good chart. Thank you. Next, what do we have? Oh, Dito. Dito. Wait, I think I heard in the SONA, the Public Services Act, which will lift foreign ownership limit on telecoms, possibly paving the way for China Telecom's full control of Dito. What do you think, guys? Do you like it or you don't like it? April doesn't like it. Oh, they both don't like it. Okay, Juanes, go ahead.
I don't know if the chart is pricing in what you just said, but
Mm.
since we last talked about it and we also gave a thumbs down on that both, it's just been drifting down, down. It's made a lower low, and
Mhm.
I haven't seen any base out of this yet. So it's nothing for me to get excited until I can see that basing policy. So I
Yeah,
will stay away first.
such a long drifting down. Yeah. April?
Yeah, well, of course, we know the reason why the stock went up is because of the excitement over third telco. And I think Juanes had mentioned it already in the past. Usually, you know, it's exciting until they actually start operating because maybe we can compute already, no? Commercial operations have begun, and so far, I think they said they already have 1 million subscribers, which seems kind of exciting if you think about it. But that said, the two incumbents have a total of 140 million subscribers, if I'm not mistaken. So if it claims to be like to want a third of that market share, they need like 40, 50 million subscribers. So from 1 million, that's still a far cry. And given the huge expenses and capex, so it will be draining cash still for the next few years, no? So it's not yet time for the earnings, or I don't expect to see earnings from Ditto anytime soon.
Yeah. Okay. Earnings not too good yet. All right. Chart doesn't also look good. Okay. I think we have the 10th stock. Mega World. Oh, Mega World. They will have the REIT also, I think, in a few months. But will the value of Mega World be enhanced by that REIT? Do you like it or you don't like it? April likes it. Juanis doesn't like it. Juanis, why don't you like it?
Well, if I were to compare that with some of the other property companies I've seen, they've all managed to, some of them have managed to break their downtrend lines. This one hasn't. And we're seeing prices attempt to be able to accelerate down below the moving averages. Your MACD looks really bad. It's not oversold yet, so that means you can have a little bit more downside. So again, I would not look at this as one of my priority bets. So I'd rather stay defensive.
Okay. April.
Okay. So the reason why it's weak, again, similar to Alaland, poor sentiment for property companies, and in May it was removed from the MSCI index. But that said, the reason why we remain positive, first of all, it will benefit from the MREIT listing because they will be able to raise quite a bit of capital. So MREIT will be 100% secondary shares. So all the proceeds will go to Mega World. Secondly, in terms of rental properties, its focus is really on offices. So its rental property portfolio is actually more resilient compared to the other property companies. And of course, the valuations are attractive. In fact, it's the stock is trading below its book value, meaning it's being valued below the acquisition price of the properties in its book. So it's that cheap.
Good value, but chart doesn't look good. Okay, so that's about 10 stocks that we already have.